Hello everyone, welcome back to our channel where we dive deep into the art and science of Forex trading. Today we're exploring a topic that hits close to home for every trader: the powerful, often destructive role that emotions play in your trading career and how you can gain the upper hand. In the high-stakes world of Forex trading, emotions like fear, greed, excitement, and frustration can truly become our worst enemies. Imagine fear as the master of hesitation, constantly making you second-guess your decisions, potentially causing you to miss out on profitable opportunities. Or think of greed, driving you to take excessive risks, potentially leading to significant losses when the market unexpectedly turns. But why do these emotions hold such power over us as traders? It's because trading is as much about psychology as it is about numbers and charts. Without mastering our emotions, we risk making impulsive decisions that are driven by feelings rather than solid analysis. Now, you might be wondering how exactly you can conquer these emotional pitfalls. The key lies in developing strategies for emotional control. Having a well-structured trading plan is essential. It keeps you focused and ensures your decisions stem from logic rather than emotional impulses. Also, practicing emotional awareness is crucial. Knowing when emotions are creeping in and taking a step back when you feel overwhelmed can save you from regrettable mistakes. Trading is always better when you've done your homework, researched thoroughly, and engaged with the trading community. Remember, following the ideas and experiences of fellow traders can offer invaluable insights. So, if you're serious about enhancing your trading skills, don't forget to subscribe to our channel for more expert tips and insights that are proven to help traders succeed. It's important to maintain a growth mindset and learn from each trading experience, whether successful or not. Staying emotionally balanced involves staying informed yet detached from specific outcomes, reducing the emotional highs and lows that can cloud your judgment. As we conclude, remember this critical caution: trading in Forex is risky. Never put all your money into trading. Diversifying your investments and practicing sound risk management are pivotal in protecting your financial health. Always trade with money you can afford to lose and approach each trade with a well-researched plan. Thank you so much for joining us today. Remember, mastering your emotions is not about eliminating them, but about managing them effectively. By doing this, you're setting yourself on a path towards more disciplined and potentially successful trading. Stay sharp, keep learning, and happy trading.